Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Apollo Tyres, a very interesting tire company. Let's understand whether you should buy it or not and what you should do in the industry. So, let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about, and this is only for educational purposes. Before I talk about Apollo Tires, here's a small request that kindly support me through Patreon, and even a $2 support a month would go a long way in helping grow this channel on YouTube and making me make more videos every day. And you can always chat with me on Patreon, taking different tiers, and discuss with me about stocks and the markets, etc. Now about Apollo Tyres. It was established in 1972 and their major business is in south of India. It is one of the biggest tire manufacturers here in India along with C8 and MRF. They manufacture for passenger as well as commercial vehicles and two-wheeler tires, so they're not based out of making only commercial or heavy duty vehicles or only for four-wheelers and all those. They make it for virtually everything. The market cap of the company has reduced to only 5,000 crores, so it has become a very small cap, and it has export operations to 100 countries globally. If you look at the financials of the company, then the sales have gone up. Sales have gone down by around 6.5%, and profit has gone down by something like 12%. So the sales has dropped by 6.6% and not positive. There's high debt on the books of Apollo Tires, and lower taxes help the numbers. So the loss would have been even worse if lower taxes would not have helped. Return on equity is only 8.4%, which is not that great considering industry average, and operating profit margin is around 12%, which is fine but not special at all. Looking at the stock performance, the stock is down 70% in the last 2 years. It was trying to stabilize itself above 100 rupees till February, and then we had a massive fall. It fell sharply in the last 2 3 months. So from February till now, till mid May or May, we are down big time. And although there is high promoter holding and institutional holding, and only 6% free float is there, but it is trading at around 10 times earnings and looking extremely weak on charts. The stock has fallen, has nosedived over the last 3 months, 3 4 months, and really investors who have invested into the stock at 120, 130, 150 are in desperate trouble at the moment. Return ratios are average. That is one reason why it has not sprung up. Although dividend payout is good, but we don't know whether the company would pay out the same kind of dividend being in losses as they were doing earlier. So you need to consider all this before holding on to the stock. Yes, stock is down big time, but whether it will go up or not, it looks very difficult with the kind of environment that we are in. So if I do the analysis at the moment, the lower crude prices at around $30, less than $30 per barrel on the Brent crude is a big positive for tire companies, because manufacturing of tire requires crude, and that is one of the biggest raw material along with the rubber that Apollo Tires would be using. But global economic turmoil has really hurt the company, and whatever pandemic that is taking place globally has also really put these companies into trouble, because their business has gone into a tailspin with no autos on the ground in many of the countries because of shutdown. There's very less use for reusable tires, to reuse tires, to change tires, etc., because autos are not moving at all. So this is a direct impact on the tire companies. Although it trades at 10 times earnings, yet I feel that earnings would be very minimal for the next 2 quarters, and in the coming 1 year you could expect a very bad number on the profit and sales front, and probably by FY22 we could see some recovery, and that is why people are not willing to get into the stock so early. and they are not willing to like buy into it big time, even at valuations of 9-10 times, even at prices of 70-80 rupees. This may continue to feel the heat, as I said, due to lockdowns, due to a lot of issues with uh, with the kind of low demand that we have for oil as well as tires. This will do well when uncertainty passes by, everything is on the road, and people are looking to buy new cars, etc. So tires are in more usage. uh, right now it is a very detrimental thing because it is an auto ancillary company. So under pressure due to the auto slowdown globally and due to the pandemic that we are facing. If you look at the technicals of the stock, currently trading at 10 times earnings and has broken all technical levels around 100-120. There was the last support, the biggest support that we know of, and post that it has gone to 72-73 levels as the lows. Around 80 would be very good levels to buy, but again you should be having a 4-5 year time frame. I don't see anything happening in the stock for the next 15-18 months, and that is a time loss, you could say, and an opportunity cost that you'd be paying for the next 15 months. So rather doing that, it would be better that if we can buy the stock at slightly higher level, say 130, 140, even say 50% higher than the price currently. But at that point of time we will be sure that the economy has turned around, that the business would get traction and they'll get more sales and things are normalizing. So even if we buy it at 140, it is not a bad thing to do compared to buying it at 80 or 90 rupees and then just holding the baby, because next 15 months could be extremely tough for the tire companies altogether, for this industry, for the auto ancillary industry. uh, in that respect, the 200 DMA is around 152 rupees, and the breakout is expected only above 120, and so around 150, which is the 200 DMA, would be a better level to buy rather than buying it at 90. So what needs to be done? In my opinion, you have to avoid for the time being, at least for the next 12 to 18 months. I don't see much of attraction. Probably 1 year down the line, you can go ahead and buy into it when things really normalize big time. At least you need to wait 6 months to 8 months before getting into it, because I don't see any traction going forward. Auto industry has to revive for this stock to do well. Yes, a drop in the crude prices the way it has done is extremely positive for the tire industry, but you have to look at the kind of problems that Apollo Tyres per se is having with respect to debt, and with a complete lockdown and with the sales virtually at zero at the moment. uh, I don't see the stock moving higher unless we have a open economy again and we have people uh, going to shops, buying more cars, buying more automobiles. So you need to take all that into consideration. You need to look at pure cash businesses which can spring up very quickly, businesses into you can say consumer durables, consumer stocks, FMCG, white goods, etc. Those are very good stocks to look into, rather than going into a sector where uncertainty would persist for the next 12 months or so, and only have 5% of your exposure into such stocks. So this was my video on Apollo Tires. So please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. And kindly support me on Patreon and send me an email. Perhaps I can help you with any doubts that you're having with respect to markets. Thanks a lot for watching.